Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hiral Datia. We have Nifty, which has finally hit the 20,000 mark in trade today. An interesting day because it was a wait and watch for all of us. And the anticipation was that probably we might not hit it. But clearly at the close, just probably 20 minutes away from close, we've hit those 20,000 levels. Let's just quickly look at the stocks which are taking us higher. Right now, in terms of the top gainers, you have names like Adani Ports, Adani Enterprises, Apollo Hospitals, Power Grid, as well as Hindalco. Whereas on the losing end, you have names like Coal India, ONGC, Bajaj Finance, as well as L&T. In fact, if you see the breadth as well, 46 advances and only 4 declines on Nifty 50. Agam, this is an interesting move that we are seeing. This morning also when we were talking about 20,000, the FNO data was indicating that kind of open interest addition as well. Where is it taking you now?
Yeah, so it was very evident for everyone to see out there because we have started seeing the Nifty establish a clear bullish trend. We did see it move consistently and stay above its 20 EMA. We also saw it move and stay significantly above its 7-day VWAP, essentially, and just about 200 points away from the 20,000 point, and now we have seen the Nifty breach that. Along with that, until Friday, we actually saw a little bit of unwinding as far as the open interest in the September futures is concerned. But today, we actually saw a good 2.5% increase in open interest towards fresh longs. And along with that, we've also seen a significant expansion in premiums as well, which means that there is a lot of longer build-up happening in the FNO market too, and the options market specifically. So there are a lot of cues out there. If you consider the writing in terms of calls and you compare that to the writing in puts, you will notice that there is a lot more coming through on the put side, both on the Nifty as well as the Bank Nifty side. So this is another indication of our likelihood of the indices moving and making those new highs coming through for the Nifty. So well, all in all, something that we weren't really expecting, at least at the beginning of the day, but well, it's turning out to be quite a strong session today. And of course, the Nifty are making history with 20,000 today.
Absolutely. 20,002 is the high that Nifty 50 has hit as well as we speak. In fact, if you see in terms of the daily move as well, almost 155 to 160 points move that we've seen on Nifty 50. A similar move was last seen on the 1st of September. Between the 1st of September to now, the breadth in terms of the markets has been absolutely narrow. A 40 to 62 point range is what we've constantly seen as well so far. Overall, if you see, let's just quickly pick up the stocks which have been making news so far. Adani Ports, Adani Enterprises, Power Grid, Apollo Hospital, Axis Bank. These are few of the names, and it's interesting to see how Bank Nifty is one of the key participants as well so far. A little over 400 points rally coming in terms of Bank Nifty, and the breadth in terms of Bank Nifty is also absolutely in favor of the bulls. Broader markets also coming into the support today, from railway to shipping to the PSU companies. All of these segments have been up and about. In fact, totally as well, except media, all the other sectors have been in the positive terrain as we speak. Let's quickly look at the Sensex as well, because at that level you have Sensex which is above 67,000 for the first time. In fact, 67,100 is what we are staring at. And if you see from a point contribution perspective, it's names like Reliance Industries as well as HDFC Bank and TCS. These are the top contributors in terms of Nifty 50 as well. Overall, in terms of market cap addition as well, it's interesting to see how, Adani Group of companies, the market cap is almost at a 7-month high as we speak. And with all of this, in terms of the kind of addition that we are seeing on a single day is little over 40,000 odd crores. So good contribution coming in from those names as well. Moving on, if you see in terms of the PSU Bank Index, that is one of the key outperformers in today's session. Metals as well as auto sectors are gaining as well. In fact, Neeraj is also joining us now to give us more in terms of what is his read, how sustainable is this 20,000 going to be, Neeraj?
This is great stuff, right, Hiral? I mean, we nudged that mark very close, and then we retreated all the way to 19,300. So it was a matter of time before this happens, and it's great that it's happening just a day after the G20 summit, which has been successful as well. Now, the beauty about this, as I see it, that some of the heavyweight sectors, financials, for example, currently still maybe half a standard deviation below the MSCI benchmarks, right? As per the Macquarie note that came out as well. We don't have IT, which is terribly expensive. You don't have autos, you don't have consumer, which is terribly expensive. We don't have Reliance, which is technically moved dramatically in a meaningful way in the last few months. So there are a bunch of pockets out there which are actually trading at very decent valuations relative to what they have, and they haven't really made a move. So if we think that we nudged a benchmark and then we'll completely pull back, well, there is an argument to be made that with the lack of rally in the large caps in the last 2 to 3 months, that may not be the case this time around. Could it be that we may actually move higher? Remember, BofA and a clutch of other brokerages have put out their notes already saying that they expect the rally to go all the way to 20,500. Now, are we expensive? You could argue that yes, we are. Relative to a bunch of other markets, we are expensive. We may consolidate here, but which is fine. But today is not the day for trying to figure out, okay, what happens here on, and are we terribly expensive otherwise? We got to realize the fact that yes, it's a number, but it's a very important number. We've nudged that at a point of time when not a lot of other markets are actually doing that great. And that should be celebrated.
Absolutely. And with this, in fact, last week I was having a conversation with Rahul Sharma as well of JM Financial, where he's absolutely sticking his neck out and saying 2,400 is an absolute possibility in the month of September. And his reasoning perspective is also because the FPIs, if you talk about the foreign institutional investors who were holding more of short contracts, have actually switched positions to long contracts, right? So the positivity from the FPIs is also coming in along with the confidence that the retail participants are showing. So the month of September probably will take us to 2,400. From there on, how much profit booking? I mean, no one's talking about it, but again, 19,250 is where he is looking at in terms of support as well, in case there is a downtick that comes in. And a couple of interesting names that he mentioned over there was, as you were saying, in terms of IT, TCS and Infosys, he was of the opinion that these two are the counters that will come in and support Nifty to the rally of 2,400. A Gale ONGC from the PSU banks could probably run up almost 20 to 25% as well in the month of September. So it's the names that are coming in from analysts as well, Neeraj, have been absolutely interesting to see this 20,000. And in fact, I think we've just got a number saying that it's taken almost 50 sessions or 52 sessions to actually hit a fresh all-time high.
Yeah, so we're seeing the laggards now start to participate. Not that the ones which have done well haven't done. So today, for example, even in today's session, railway stocks, etc., are all doing okay. But you saw the whole of last week punctuated by gains to a Coal India, a Larsen and Toubro, just showing that there's a bit of a meaningful move happening in a clutch of sectors that had not participated thus far. So that is one good thing. That the rally is not being led only by a narrow set of stocks like the Nasdaq. That's part one. We have to be cognizant of the fact that while this number has been achieved, the reasons for a pullback are aplenty. Aside of the valuations, the fact that the dollar index is doing very strongly against a clutch of other baskets, as the nature of the dollar index, plus the fact that crude oil is at $90 a barrel or thereabouts.
It's sustained above $90 per barrel.
So it's trading circa 90 as well. That's not pleasant news. But one would reckon that just a number of avenues available for global money to put large chunks of money to work is very limited. It's very rare, Hiral, that you hear a Chris Wood go out on an Asia conference and say that despite the rally, India remains the best place to be in Asia. These are large global strategic advisors or large global strategic managers who are all talking about how India needs to be a part of the portfolio. And when you're in such a scenario, if other things don't get spoiled too much, dips have to be bought into. I would reckon that is probably one thing that every fund manager or every money manager unanimously will tell you or me, that we don't know what the markets will do. Who knows? Frankly, it's a month's game to try and predict whether it becomes 21,000 or thereabouts in a particular time. I mean, there are technical experts who can do that. But fundamentally, the quantum of gains or losses is one thing. But does this market remain one which has to be bought on dips because the slightly medium term to long term looks strong? The answer should be and will be an unequivocal yes. I'm sure we'll get a bunch of experts now because we've hit this magic number, come and probably talk about the same thing. But I think that largely should be the construct.
Absolutely. And the kind of contribution and the gainers that we are seeing, since the last time in the month of June that we hit that magical record high number. It's names like BHEL, NTPC, a lot of power names that have been top gainers as well since then. But apart from that, this 1,000 points rally from 19,000 to 20,000, as we mentioned, a 52 session move what has taken to actually get these 1,000 point rally. In terms of biggest contributors to this up move in today's session, apart from a Reliance Industries, it's interesting to see how the banking names have contributed as well. So apart from an HDFC Bank, you have ICICI as well as Axis Bank, which are the top contributors in today's session. But you have names like BHEL, REC, Z Entertainment, Birla Soft, Polycab. These are names which have actually moved, from the 28th of June to now. This is last when we actually hit that mark. So good moves coming in a lot of varied sectors. Overall, apart from that, just 4 drags in today's session: Coal India, L&T, Bajaj Finance, as well as and ONGC. So the breadth is also absolutely in favor of the bulls as we speak. In fact, we will try getting a couple of guests as well in terms of what's happening from here on, how sustainable it is going to be as well. In fact, we have Kush Bohra, founder at kushbohra.com, to give us a quick heads up in terms of what is the technical and the F&O data indicating in terms of overall levels to watch out for. Kush, good afternoon and welcome to the show. We've hit that magical number of 20,000. Sustaining above that, it's going to be interesting if we get a close about 20,000 levels. But what is the derivative and the technical data indicating in terms of levels to you?
First off, thank you for having me here and congratulations on the 20,000 mark. I mean, it's been, a journey that, it's taken some time. We came tantalizingly close to it the last time around. We were at 19,900. But yeah, from here on, I would suggest cautiously optimistic view. And see, the reason is very simple. Assuming, and which it will be, today's closing will be the 7th positive closing on the trot. I'm saying if for nothing else, then at least just this alone warrants, a near-term caution on the markets. The mid-cap and the small-cap spaces were already, a little overheated, but they still continue to do well. And that's why the optimism, but the caution because of the fact that, we haven't seen a round of profit booking in the last 7 days on the, on the indices itself, on the Nifty itself. So hence concern. But I was listening to your conversation also, just a while ago. And yes, this market is a buy on dips market. Despite the kind of selling that we've seen from the FIIs over the last, month or in fact, even 2 months, the market's actually just gained from strength to strength, at least in the last 7-8 days, right? So this is suggesting that there is an appetite for Indian markets. Once the FII buying sort of resumes, your guess is as good as mine where the index is headed from here.
For getting us the details in terms of what levels you're watching out for. We'll come back to you shortly for any further questions. But clearly, Neeraj, from what we're picking up so far as well, it seems that we probably would sustain above the 20,000 levels on closing basis as well. And that's going to be an interesting one to watch out for.
Yeah, I mean, yes, for a near-term trader, clearly that would be a good level. Does it kind of indicate that some option positions get here and there? But frankly, like I'm saying, I mean, it's a moment to celebrate, independent of whether the next 100 points happen in a matter of 1 day or 2 days. Yes, very important for the day trader, but it's important to realize the trend of what's currently happening. Okay, and I think to put that into perspective, a very special guest, Siddharth Bhaiya of Equitas Johnson right now. Siddharth, you beaming and with reason. Congratulations to all of us. You must be happy, man.
Hi. Good afternoon, Neeraj. Yeah, I think great time for all of us. We happen to be living in the best country, in the right country at the right time, isn't it?
Yeah, you can.
The world is going through a very difficult time right now, but a completely different story as far as India is concerned.
Yeah, clearly so, Siddharth. How do you explain this dichotomy and what does this mean? I know it's just a number, but in some sense, it's an important psychological number, right? We've been talking about these numbers for a while. We've hit that at a point of time when you said not all the other world markets are doing as well.
Right. So, Neeraj, look at March 2020. Who would have thought that we would have reached this milestone just 3.5 years back, right? At that point in time, it looked so difficult. We didn't know what was in store for us. So I think a great time.
Yeah, most
a great time for us, right? And hopefully the economy is on a very sound footing. and we should continue to do well going forward.
Okay. Now, Hiral, Hiral, here's the point, right? The other thing to keep in mind, and we'll continue a conversation with Siddharth in just a minute, but I think the point that he made, and I've seen some of his tweets in the recent past, right? Their performance has been rock solid. And he's talking about how if you get a chance to invest in small caps and mid caps, and if you have the strategy to do that, yes, you will see drawdowns. But if the eventual performance over 1 year, 3 year, 5 years, 7 years turns out to be the numbers that, for example, they've clocked in or some others have clocked in, I think it's worth it. So Nifty at 20,000 no way signifies what's happening at the broader end of the spectrum.
Correct.
But here's a deal with the benchmark at that level, and the mid caps and the small caps having rallied so strong for the last few, and the fact that, as Siddharth highlighted, it's not that too many countries are doing this. This is a really important thing. I'm sure you have questions for Siddharth as well.
And overall as well, if you see in terms of the small cap index on the AMFI data that came in today as well, our read was that probably we'll start seeing some bit of an outflow in the month of August, but it's very different because we've seen the same 4,500 crores of inflow in the small cap. Large caps have continued to see an outflow. And if you see YTD, a 40,000 crore inflow in terms of small caps, and that's a big deal for an Indian market where we are already talking about are we expensive or not, right?
Yes, certainly. Actually, so before you ask your question to Siddharth, let me ask him this. Siddharth, in some sense, is it heartening that because of the SIP flows, because of the PMS flows that managers like you are receiving in droves, such a large portion of the Indian market now owned by Indians, and they are bought at every level, right? Because of the SIPs or because of the PMS flows, as a result of which the average Joe is actually sitting on hefty profits.
So, Neeraj, let's go back to March 2020. The market was extremely polarized with only, the so-called FANG or Ritik stocks doing well. And the theory that time was that only you have to invest only in those stocks to make money. And since then, everything other than those stocks have made money. So the point is, right, probably is this the right time to get into small and mid caps? I have no idea, right? We've been doing it for the last 10 years, 10 and a half years. I've been doing this for the last 20 years. And all I can say is if you have a long-term perspective, this is this is a good asset class to be in. Is this a right time to jump in lock and barrel? I don't think so, right? So yes, money is coming in. We're all rejoicing. But every time I've seen people rejoice on television at certain levels, things have been difficult going forward. So I don't want to, burst the balloon as yet, but I say, let's be cautious. Let's be cautious.
Right. So Siddharth, after being cautious as well, do you think still there is room for someone to come in with further infusion, or do you think you should just wait and watch for the bubble to burst?
So there's one side of the market which is absolutely scary, right? Today, an SME IPO got oversubscribed 1,000 times, right? But on the other hand, we also have fundamentally the India story is extremely attractive, right? The kind of news flow that we are seeing looks like even if the government capex or the private capex, even if 20% of that of what has actually been announced gets implemented, it'll have a significant multiplier effect as far as the GDP is concerned. So long term, yes, I'm bullish. Short term, I have no idea. My concern is the SME market, the SME IPO market, and a general level of froth. 6 months, the small cap index is up 40%, right? So at this point in time, caution is warranted for sure. But while I'm happy,
I take
and I don't want the viewers to feel, I'm always a cautious person, Neeraj.
Yeah, I agree. But no, I was telling Hiral that I take exception to the word bubble to burst. I believe we're not necessarily in a bubble territory per se, except for select pockets. And that's my next question, Siddharth, to you. That even if hypothetically a section of the market is looking overvalued, having run so much, etc., within that pocket or otherwise, there would be pockets which are fairly valued. I mean, your portfolios, I know your funnel is that you don't select a company unless it is below a particular threshold. And I'm sure your portfolio is full. So there are enough pockets of growth out there available at reasonable valuations.
Yes, there are always opportunities in the market, right? The commodity spaces again started looking up. We're seeing internationally prices of commodities, crude going up. So at any point in time, there are opportunities in the market. It's just that the number of opportunities that are there right now are far lesser than what they were, say, a couple of years back. 3 years back, the market was a sitting duck. You could have just thrown darts and picked stocks. But unfortunately, at that point in time, people didn't want to buy any of these companies. So while opportunities still exist today, right, they aren't as many as what they were 2 years back.
Right. So, Siddharth, where are you seeing the opportunities now from here on? Because if you see in terms of broader markets as well, that sector rotation has already happened, right? We're in that last leg, it seems. So, what are the
Right.
opportunities where you would advise stock picking?
So to be honest with you, look, market work in cycles, right? And as far as I've discussed this with Neeraj before in the past that 2010 to 2020 was all about consumerism, and 2020 onwards, we are all seeing government infrastructure, government spending drive the growth, and this is going to have a multiplier effect as far as this. So I think the capex cycle, the government infrastructure spending cycle, has only just begun. Until unless we don't have serious accidents as far as the macro picture is concerned, you would see government spending to be very robust. That will in turn drive economic growth and GDP growth. So I think we have some legs to go as far as that sector and that cycle is concerned.
Siddharth, we won't take too much of your time. I'm sure your team is ready to celebrate with you because your performance has been strong all through this while. Thank you so much for taking the time out and celebrating 20,000 with us.
Thank you. Thanks, Neeraj. Thanks a lot.
The
It was
pleasure.
good to be on the show. Bye-bye, guys.
Thank you. The pleasure was ours. Thanks so much for that. So, well, that's one important voice doing this. Now, it's important to get in somebody who actually does both ends of the market, right? Andrew Holland, largest Cat 3 AIF, goes long, goes short, can make money every way. Want to understand from him how is he thinking about the markets at 20,000. Let's get Andrew Holland on the show to try and understand what is his perspective about what could happen ahead. Andrew, great having you. Thank you so much for joining us. Elated, worried, or taking it as it comes?
I think the latter, actually, take it as it comes, because it's, the momentum's there, Niraj, you can't fight it. So go along with it until, something changes that momentum, whatever reason it might be. But on the data today, it's not as though I want to kind of throw cold water on a market that's hit 20,000. I'm sure, the retail investors who have been, over the years now increasing their exposure to the markets, must be very happy. And it's rewarding them as well for that. As we've been saying for years, keeping there for the long term, do your SIPs, it all works out for you. So I don't want to pour any cold water on today, but, no doubt we'll get into overbought territory, which, we will. With this momentum, and then some factor will come through which worries us, and the markets will have a healthy correction, and that's what it will be. So remain constructive on the markets. I know a lot of people are talking about bubbles and this and that, and certain sectors, obviously clearly kind of, taking years of earnings growth to justify some of the ratings that they have, and once things kind of settle down, some of these ratings will obviously, or some of the share prices will go back towards the mean valuations.
Right. Good afternoon, Andrew. So I take your point that you would not really want to, actually pour cold water at this hour. However, do you see that sector rotation, probably not even sector rotation? I mean, we've been in an overbought zone specifically from the broader market perspective right now. Even the mutual fund data does indicate that there are outflows happening from your large caps. So if you see that profit booking coming in your broader markets, do you think that rotation, the money will start flowing into large caps, and that will help us sustain in terms of markets?
Well, I think that's been happening a little bit in to push us towards that 20,000, really, hasn't it? It's I think there's been some concerns over mid cap. So as incremental monies come in, I think you've seen that go more towards the large caps. Because you're seeing quite a number of sectors which have been underperforming for no rhyme or reason. Say the banking sector, there's a number of factors behind that, but now you started to see some leadership there for the first time in a while. So that's what's, I think, helped the market. So more of, I'm not saying sector rotation, but some of the sectors which have underperformed in the large cap space are now starting to perform.
Yeah, Andrew. Could that be the case, that the market may not necessarily go down? I mean, 15,000 crores coming in a month, 2 months on a trot, plus PMS, AIF, so on and so forth, and global money. Maybe the market consolidates, and pockets which have underperformed thus far kind of put up their hand.
Yeah, I mean, let's just take an example, right? If you take Nifty, and let's say the banking sector, including say Reliance and a few other stocks, start to perform, then obviously you're gonna see the index continue to kind of scale new highs. But you do go into that overbought zone, and at some point, there will be a factor which brings us, I'm not saying breaks the bubble, but actually kind of takes some of that euphoria away, and we go back to a more normal kind of thinking about the market multiples and so forth. But I think at the end of the day, what factors could bring the kind of the market to kind of fall are all probably global factors rather than local factors. I'm excluding political events in India for the moment, because that's something for next year. But be a global event rather than a local event, to my mind. Although the local event could be the lack of monsoons or El Nino, pushing up inflation and expectations that interest rates won't fall very quickly. That's the only factors I can think of at the moment.
Andrew, a quick follow-up. There is a lot of fear around the broader end of the spectrum and having rallied too much. My question is, there are a bunch of sectors out there, due to government policies or otherwise, are actually seeing tremendous leg up of current earnings as well as promise of future earnings. Could this time, in some sense, be really different for specific pockets? I know it usually is the same, and this time is never different. But for select pockets, although they have extended, could it be different?
So let's take one pocket, which I think you're alluding to. Let's take capital goods.
Sure.
Where you're seeing, if you go back to that 2004 to 2008 period, what moved those share prices? It was the orders being awarded to companies, rather than it was the execution. So I would say that as long as the order inflows continue, share prices will do well. Because obviously, analysts will, say, well, in 2025, this will have a better impact on earnings. But execution is the key, and we're not going to see that for some number of years. So my view would be that go on the order intake rather. It's going to be different this time in terms of execution.
Right. Andrew, how are you looking at the FI side of it? What's the mood on that ground? Because, and do you see the inflows continuing right now? And how do you see the rupee impacting the way FIs have been really looking at the Indian markets?
So there's kind of two schools of thought here. One is the foreign investors who just love India and obviously don't like China. I mean, there's a very easy pocket of conversation there. So whenever you speak to heads of research or broking houses, whenever they go overseas and meet foreign investors, they only want to talk about India and what to buy. So China's kind of off the chart in terms of talking. Then there's other investors, going back to your depreciation of the rupee, particularly in the US, who think that, hold on, I can get, 6% or around 6% in terms of, bond yields or credit in the US. And, a lot of the time I'm not making that kind of money when I take into account depreciation of the rupee. So, again, it's a compelling story for some, and it's still a work in progress for others. I think the other factor as well is that obviously for foreign investors looking at India, they have to bring China into the equation at some point. Not just because of what's happening in China, but the problems it could cause if they were to have a big stimulus in terms of commodity prices, or if they don't, and the yuan continues to depreciate. That will have an impact on our currency as well. So those are the kind of factors they would look at. So unless they think the rupee is going to be stable, which they don't, not because of India factors, but global factors or China factors, then that could be another reason for some investors not to love India as much as most seem to do at the moment.
Okay. My final question to Andrew Holland, and viewers, Andrew has been kind enough to say that he doesn't want to pour cold water, but throughout the interaction, he's maybe rightly so put out factors of caution that people should keep in mind. Andrew, you run a long short fund. You have the option of going short as well on the market if you want to. Just trying to understand, are you tempted to do that while the train is moving in one direction, but because there are pockets of overvaluation and excesses, if you will, are you tempted to go short?
No, so there's certain sectors of thinking that you can look at in terms of where you probably say expect underperformance if not just pure stock pricing falling. So let's take the oil price. I mean, the oil price is over 90. If it was to shoot to 100, that would have a big impact on a lot of companies, not just necessarily oil companies, but the paint companies, etc. So those are your kind of natural shorts. If you think China's going to do nothing in terms of any stimulus and it's going to let the currency depreciate, then obviously commodity prices, metals in particular, would take a hit from here. So you're just looking at those pinpoints of where you can naturally go short the market, where there's factors playing in those sectors which would have them, the sectors or share prices falling.
Andrew Allin, much appreciate you joining us on such a short notice, but such an important day. So great to have your views. Thank you.
Thank you again. Thank you.
Pleasure was ours. Well, that's Andrew Holland, largest cat through AIF, and giving us his views. Cautious is I think the tone was. Siddharth Bhaiya also kind of sounded that.
Everyone is not very confident, Neeraj, and that's my key takeaway from exactly. No one wants to really stick their neck out and say that yes, this is going to sustain, but everyone is positive on the India growth story.
Yeah. So the long term, everybody's positive. The short term, are there some excesses? Sure, they are. And which is why I think I'm waiting for our next guest to come in. He caught in. And his belief around Indian markets and the growth has been unwavering now for the past multiple quarters. And he's written this story very well. And therefore, it'll be great to have him to try and understand how is he feeling about this. Because much unlike our other two guests, who, of course, had a terrific run in the PMS or AIFs in whichever way, but they were sounding cautious. I would love to know if our next guest is also sounding cautious as we speak. But Hiral, aside of what guests are saying, right, you just what the data is screaming out to you. Maybe we're talking to the Motilal Oswal team, for example, with data, the wealth team with data, and they're saying that there are statistics which show that while there is fear around mid caps and small caps are actually a lot less dangerous right now versus the mid cap index of mid cap 150. So data you can slice in multiple ways, and it could throw multiple things at you. But frankly, the conversations with some of the companies and their belief around what could happen to earnings because of a number of factors is very strong. Sometime in the next 24 hours, viewers will hear a conversation with a company which is in an extremely overvalued pocket, which is railways, you could argue. And we spoke to Titagarh Wagons from the shop floor. He's given reasonings about why people's beliefs or fears around cash flows not sustainable are not true. But like I said, the guy who actually got it spot on, Hiral, who's been an unrelenting India bull for the past so many quarters. And I was at a party with him wherein a company management told him that you guys got the bull market in our sector as well perfect, but we didn't get it. Vikas Khemani of Carnelian joins in right now. Vikas, great having you. Thanks for taking the time out. And I suspect, or rather I don't suspect, I'm sure that you must be a very, very happy man currently as we hit 20,000.
I think this is only one in a, it's just a milestone. There's no, this is just a one milestone, basically in the whole long journey of India success story, India blue story panning out. So yes, of course, 20,000 is a milestone, so one should celebrate. But in my opinion, it's a very, small pit stop in a long journey. I would say that the real big bull story of India is yet to fold. What we have seen is probably a trailer. The real movie is yet to happen. I think after a very long period of time, India is seeing a very well diversified, sustainable growth. And I like to say that, we are spoiled for choice. Today, look at banking, automobiles, manufacturing, IT, infrastructure. Everything is being reimagined. Everything is being reimagined in the context of domestic demand as well as the export potential. So in some sense, India is setting global standards. India is taking a global leap. And when this kind of transition happens, and thankfully we have a leadership, at the government, which is also visionary to enable some such of these potentialities of India. So I think we are leapfrogging in everything. G20 was just another, showcasing of what India could achieve. whether it is space, whether it is infrastructure, whether it is soft power, whether it is global cloud. I think India is making rapid progress. And whenever such kind of transition happens, I call it orbit shift. Then the magic event for the country is waiting to happen. It is happening. So while we all should cheer that we have hit 20,000, but we all should see is a very early stop in our long journey.
Good afternoon, Vikas. Earlier as well, probably when we were in that consolidation phase after we hit a record high last time, you have been of the opinion that this kind of consolidation that we are seeing in the markets is actually a time which is creating space for a further, market rally. And you've been sticking your neck out at it as well. So from here, that we've just hit a number of 20,000. What's the kind of up move that you're looking at, and what are the spaces or sectors that will help us see that uptick?
Like I just said that, Nifty not 20,000, maybe 50,000, 40,000 is not very far. It is there. It will happen. It's only a mathematical number. And like I said that we are spoiled for choice. I think this time around, the width of the participation is so high that there are many ways money will be made, wealth will be created, banking, manufacturing, IT, infrastructure, startup ecosystem. I think there's a very, very, very wide choice. So everything will contribute to it. There will be small pockets where some sectors will take lead for some time, some will consolidate it. Though that's part of the market, like banking took a consolidation in last 6 to 8 months. Now it is taking a lead. I mean, those things will keep happening. But keep in mind that India story is very wide, deep, and that makes it very, very interesting. And today, what we have seen so far, we haven't seen any global capital coming to India yet. And mark my words, again, post-elections, we will see an avalanche of capital coming to India because there is no market of India's profile where you can deploy capital with this kind of depth and with this kind of potential confidence on sustainability of growth.
Great. Because I know we have to thank you, but I'll just take one more minute of your time and just ask you one question around the concerns, because you are constructive from the long-term perspective. The near term, would a weaker rupee, a higher crude price, etc., be near-term spoil sports? I know the long-term story is intact, but now that we've hit a milestone, maybe we are expensive optically on valuations as well, and there are these concerns. Could these bring a bit of a correction, a healthy one at that maybe, into the markets?
Like I said, there will be situations. So let's say crude hits $100, which I don't know, I don't think it will, but it can. Who knows?
Sure.
Right?
Yeah.
There might be some impact on the inflation. Right now, I think the world is fighting inflation in some sense. I think India is also a bit of on a higher side. But good part is that our government is very sort of proactively managing this part of it, like what we saw. Whole of the world reeled under the inflationary pressure because of the crude oil some time ago, but India managed well, right? So I think when there's a proactive governance, you're confident that it will be managed well. But having said that, there will be periods of consolidation, corrections in the market. This journey is not going to be one way, and there will be some or other reason for coming through. Let's say if a news comes like SVB came some time ago, there might be potential, risk sitting somewhere else. No doubt that U.S. economy is sitting on that. The leverage in the U.S. economy is kind of high. So all those things can create some kind of temporary setbacks, corrections, but they will be only again slowdowns. Fortunately, I don't see any bubble within the Indian economic space. I don't see any major risk from the economic space. We have a good forex reserve. Our current account deficit is well placed. Our fiscal account is well managed. So our banking sector is reasonably well capitalized. So you don't see any excessive getting built at the economic level. Of course, in the markets there will be some excesses. Always will be there. And as and when those excesses get built, they will get punctured. But at a collective level, at a market level, I don't see any major excessive getting built.
Absolutely. I think the levers in terms of the India's growth story absolutely intact, Vikas, as you're mentioning. Thank you so much for joining us on this day when we've hit this magical number of 20,000. I know there's yet too much more in store for all of us. So Neeraj, clearly, from all the guests, from Andrew to Vikas to Siddharth, from whatever they've told us, clearly the confidence level in terms of India is absolutely strong. Everyone's betting big from a medium to long-term perspective. yes, no one's really confident of how many bouts of correction or dips that could be in that journey. There could be hiccups. Absolutely,
because
right?
that's an imponderable.
Exactly. So that's what people are talking about. But in comparison to other countries, in spite of the valuations being stretched, people still have the confidence. And if you're going to see the FI money come in, that leg of rally is also going to be really strong.
Yeah, I mean, it'll be really interesting to see what happens to earnings in that interim, and does that give more ammo to FIs to come and think of putting money, even if it means that's slightly above standard deviation valuations. So, but that's for another day, Hiral. For today, sorry, as you were saying.
No, I was just going to say that even the small cap rally, right? What we've seen so far is not a rally which is just from an optics perspective. It's based on fundamentals, because the kind of order books that you're seeing, the kind of execution, because from here on, if the execution is on track, and if the kind of orders that the government is announcing, as well as Siddharth was mentioning, that even if 20% of it is, there is execution, it's a different story for us, right? So there are fundamentals even for the small caps to see this kind of movement.
Most certainly. I mean, at some point of time, you got to question, as I think Ravi Dharamshi was questioning today on Twitter, that why paint companies by market cap? There are some smaller names which have fabulous growth story. But yes, there are pockets of excesses. I mean, the SME IPO space, it's not just one IPO that Siddharth was talking about. There are two or three who've gotten these obscure subscriptions, so on and so forth. So there are issues, but hey, they're happening in the US as well. The golf maker, which we wrote about yesterday,
600%, I think, and then a crash.
Yeah. So, I mean, it's happening multiple times, but the limited point is this macro story we'll do tomorrow, Hiral. Today we should celebrate. We should wrap up this show, go to the newsroom, and then try and celebrate with the team, because like it or not like it, yes, it's a milestone, and yes, there are more to go, but 20,000 is a special milestone, and we should celebrate it.
Absolutely. Our Friday has come in on a Monday, Neeraj, for all of us, I think. That's what it seems like. So lots more you will be able to watch on BQ Prime. In fact, if you've missed this conversation that Neeraj and I have had with all the guests, please tune in to bqprime.com, and you will be able to catch all the action there and lots more guests during the day, as well as tomorrow morning, where you will get to hear updates as to what's in store next. That's all that we have in this session. Thanks for joining us, and have a great evening today.